Introduction to insurance. Transfer of economic risk to someone who is capable of handling it, generally to insurance company. This is known as insurance. It is considered as a process by which the losses of a few are shared among many those who are exposed to similar uncertain event situations. Life insurance history and evolution. The origin of insurance business started from London Lloyd Coffee House. It first life insurance company to be set up in India was the Oriental Life Insurance Company Limited. First non-life insurance company was Triton Insurance Company Limited. First Indian insurance company was Bombay Mutual Assurance Society Limited. National Insurance Company Limited is the oldest insurance company, founded in 1906. How insurance works? There are two types of risk burdens. Primary burden of risk, losses actually suffered, namely factory getting fire. Secondary burden of risk, losses that might happen, namely physical or mental stress strain. Risk management techniques: risk avoidance, risk retention, risk reduction and control, risk financing. Insurance as a tool for managing risk. Don't risk a lot for a little. Namely, there is no need to insure a ball pen as its cost is not high. Don't risk more than what we can afford to lose. Namely, we cannot afford to not insure our house as its cost is high. Considering the likely outcome, namely, can anyone insure a space satellite? Note: insurance refers to protection against an event that might happen, whereas assurance refers to protection against an event that will happen. Customer service. Importance of customer service. Keeping the customer happy benefits the agent and company through customers' lifetime value. It may be defined as a sum of economic benefits that can be derived from building a sound relationship with customer over a long period of time. Customer lifetime value consists of three parts: historic value, present value, future value. Historic value: premiums and revenues received through the customer is past. Present value: premiums that may be expected to be received if policies are to be retained. Future value: premiums that can be derived by persuading customers to buy new policies. Agent's role in customer service. Point of sale, proposal stage, acceptance stage, premium payment, claim settlement, other services, grievance redressal. Point of sale. The first point for service is the point of sale. The agent should be able to understand the needs and suggest products whose benefit features are best suitable. The role of an agent is like a personal financing planner and advisor. Proposal stage. The agent has to help customers in filling the proposal form. It is important that the agent explains and clarifies the proposer doubts while filling the form. Acceptance stage. The promptness of agent in handing over FPR to customer develops surely in customer's mind. Delivery of policy bond is another major opportunity. Premium payment. Agents can be in continuous touch with their customers through reminder calls for premiums due in order to avoid lapsation of policy. Claim settlement. Agents play crucial role during claim settlement by providing policyholder details required during investigation stage. Other services. Another opportunity that agents have in order to give their best is during other services such as nomination change, assignment, duplicate policy, etc. Grievance redressal. The time for high priority action is when the customer has a complaint. The issue of service failure can lead to two types of feeling or emotion. A. Sense of unfairness, cheating. B. Sense of vertigo, being able to look and feel small. C. Communication skills. One of the most important set of skills that an agent needs to possess for effective performance is soft skills. Soft skills relate to one's ability to interact effectively with other workers, customers. What goes into making of a good relationship is trust that you generate in your customers' mind through attraction, being present, communication. Communication can take place in several forms: oral, written, verbal, body language. Lastly, possessing good listening skills and being not judgmental helps a lot. Elements of effective listening: paying attention, providing feedback, responding appropriately, empathetic listening, and not being judgmental. Grievance redressal mechanism. Grievance redressal mechanism IRDA has a various regulations in order to render the consumers' grievances or complaints which come under Protection of Policyholders' Interest Regulation 2002. Integrated Grievance Management System IGMS. IRDA has launched an integrated grievance management system IGMS which acts as a central repository of insurance grievance data and as a tool for monitoring grievances in the industry. Policyholders can register on this system with their policy details. Complaints are then forwarded to the respective insurance company. Consumer Protection Act 1986. The act was passed to provide for better protection of the interest of consumers and to make provision for the establishment of consumers' disputes. There are three consumer dispute redressal agencies to handle such complaints at each level: District Forum, State Commission, National Commission. District Forum. They take complaints where value of goods is up to rupees 20 lakh, established by each state government in each district. State Commission. They take complaints where value of goods is more than 20 lakhs but less than 100 lakhs. Established by state government in each state, they take cases which are not settled at district forum. National Commission. They take complaints where value of good is expected rupees 100 lakh. Established by central government by notification, they take cases which are not settled at state level. Procedure for filing a complaint. The complaint can be filed personally or by any authorized person. There is no fee for filing complaint. No advocate is needed. Nature of complaints: delay in settlement of claims, non-settlement of claims, repudiation of claims, policy term and conditions improper, etc. Consumer forum orders: return of good price, premium in case of insurance, to remove defects or deficiencies in the services and goods, to discontinue unfair trade practice, to provide adequate cost to the parties, to award such amount as compensation to the consumers for any loss or injury. Insurance ombudsmen, Lokpal. The objective to resolve all complaints related to settlement of claim on part of insurance company in a cost-effective, efficient and impartial manner. The ombudsman, by mutual agreement of the insured and the insurer, can act as a mediator and counselor within the terms of reference. The decision of ombudsman whether to accept or reject the complaint is final. Complaints to ombudsman. Any complaint should be made in writing, signed by the insured or his legal heirs. Complaints can be made if complaint was initially made to insurer and was rejected or not received by insurer. No satisfactory reply given by insurer. Complaint is made within 1 year from date of rejection from insurer. Complaint is not pending in any court or consumer forum. Recommendations by ombudsman. Ombudsman has to give his recommendation within 1 month of receipt of complaint. Copies of recommendations are sent to both complainant and insurer. Recommendations have to be accepted in writing by complainant within 15 days of receipt. A copy of acceptance letter by the insured should be sent to insurer and his written confirmation within 15 days of his receiving such acceptance letter. Awards by ombudsman. The award should not be more than rupees 20 lakh. The award should be made within a period of 3 months from the date of receipt of complaint. The insurer shall abide by the award and send written instruction to the ombudsman within 15 days. If the insured does not intimate in writing the acceptance of such award, the insurer may not implement the award.